One of the things that I constantly remind myself about or say to myself is that things can go much higher and much lower than I could ever imagine. The stock market can go much higher than maybe anyone could imagine. Gold and silver and precious metal mining stock could probably go much lower than anyone could imagine. And I just continue to remind myself how I'm so limited and so flawed as a human in growing money. And here we are almost halfway through 2013. And pretty much it looks like you wake up in the morning, the stock market goes up 1%, and gold and silver go down 1%, and then you go to bed, and then you wake up the next day and you just repeat that. Oh, and there may be some money printing and some wars in the Middle East, but basically the stock market goes up 1%, precious metals goes down 1%, and that's your job for the day. And you don't need to do anything. You don't need to pick stocks. You don't need to do any macroeconomics, fundamental research, any research, because you just know the market's going to go up and just be in the market. It's kind of the old buy and hold from 1982 to 2000, except if it was just that easy. So my thoughts this week, or really my main thought this week, is cheap debt can hide lots of lies and lots of sins. And I often say to my clients that the word average can hide a lot of lies. But I started thinking, what else can hide a lot of lies? And cheap debt can hide a lot and a lot of sins. And I want to show you how that's showing up with earnings per share and how that isn't really what it seems. I want to kind of show you how there's no more life rafts left when things go bad. And I want to point out how the governments aren't even hiding this anymore. It's become so blatant. They're just doing it in open now, in the open now. And last thing is rates absolutely cannot go up. They will stay range bound for probably longer than anyone could imagine. They are going up right now, but they are in a range, and I'll talk to you about that in a minute. So the first thing is earnings per share. Look at this. For 18 months, from Q3 2011 to Q1 2013, that's 18 months, earnings on the S&P went up $3.70. Well, 2/3 of that earnings was share buyback. Probably most of that, or a lot of that, is with either companies that don't know what to do and don't know how to grow their company, so they're buying back shares. That's actually not how you grow a company. Or companies who have taken on very cheap debt to buy back their shares. Whatever it is, you don't grow the wealth of a company by buying back your shares. You grow a company's wealth by inventing and creating value and creating more value by inventing things, services, products. So I just find it very interesting that 2/3 of the earning per share growth over the last 18 months have been either because of cheap debt or companies not knowing really how to grow their company simply because the economy is not as strong as Washington, D.C. would want us to believe. The next thing I started to notice is, when things go bad, when we have our next business recession or balance sheet recession, the Fed can't lower the rates anymore. If you look at the screen here, this is the teal, purple, and blue lines are the 3-month yield, the discount rate, and the federal funds rate, and those almost always get dropped or lowered when we go into recession. The red line is the stock market. So the recession in early 2000, it was answered by, or early 2001, it was answered by lowering rates very low, and it worked. And then in 2000, about October 2007 to March of 2009, what did the government do? They lowered rates again, only now they lowered them to almost zero, and that worked. Well, what happens the next time? And there will be a next time when the market corrects. The Fed can't lower rates anymore, and that's their main tool. So it'll be very interesting to see what they're going to do. And they're already buying $1 trillion a year of bonds and mortgage-backed securities. So sure, they could buy more. But at what point is the market going to say no more, or the bond market going to say no more? Eventually it will. But again, things can go on longer than we ever could believe or imagine. And then I started noticing how the Fed does their primary open market operations on Tuesdays, meaning they go into the market and buy their bonds and their mortgage-backed securities. And the greenish line, the moss-colored line on the chart, is what the S&P has done. If you just took the Tuesdays, if you just took what the S&P did on Tuesdays, going back to the beginning of November, going back 6 months, that's what the moss color line would have done. And the red line is all of the market days minus Tuesdays. So clearly when the Fed goes into the market and is buying bonds and mortgage-backed securities that is juicing the market. And they're doing it every Tuesday, as you can clearly see here. Now, the last thing I just want to point out to you, because rates have gone up pretty significantly over the last, let's see, 3 or 4 weeks, and the screenshot you're looking at right here is a 30-year fully amortized mortgage in the US. It went from below 3.5% at the beginning of May to now it's above 4%. And I just want to point out that we are going to stay in a range-bound rate system for longer than anyone can imagine. And the screen you're looking at here is a 10-year treasury, is the yield on a 10-year bond. And you can see it did really take off at the beginning of May from below, what about almost 1.6% to above 2%. But I will be shocked if it breaks 2.4% and stays above it, because it's clear to me that this is a range-bound bond market. And we had one of these before in the 40s and the 50s where the government kept the 10-year range-bound between, what was it, 1.5% to 3% for 18 years. 18 years. So things can go on much longer than you ever can imagine. So waiting like one more month is not necessarily the best approach. The best approach is to start adapting to what's going on, so you don't have to be 100% right and you don't have to be 100% wrong. And as frustrating as all that can be, this is what we have. This is the investment world we're living in, literally living into and living in right now. My monthly strategy gathering is coming up on June 11th. I'm going to stream it live at 11 a.m. where I'm adding 1 or 2 ticker symbols. I'm putting a couple to rest. We've had some huge gains in some, and I'm setting them aside. We'll take the gains, and I'm adding in a couple great ones. Of course, we'll go over the markets and have speed investing, and I'll take your questions live, and we'll update the strategies and look at some market x-ray investment sliders. You guys take care. You have a great weekend. Hug your kids, call your kids, or your spouse. And I'll speak with you guys this coming Tuesday for the monthly strategy gathering. Okay, you guys take care.